This is a story about Keyman Insurance. This is Joe, and this is his business partner Greg. Together, they founded and run ABC Widgets, and each have their own specific roles within the company. Joe's a social type. He handles all the relationships and sales within the company. And Greg, well, he's a numbers man. He controls the finance, inventory, and all staffing issues. In order to grow the business, they had to get finance. Together, they owe about $500,000. Both partners are married, and both have young children. Unfortunately, life doesn't always pan out as planned, and tragically, Joe dies suddenly. This leaves behind his young family, and of course, his partner Greg. Thankfully, Joe had life insurance to cover his mortgage. But now that Joe isn't around, the banks get nervous and they call on the loan. Now the only other option is that Joe's wife takes control of his share of the business. The problem is, she knows nothing about it. So now what happens to the business? Sales fall, staff leave due to job insecurity, and creditors and suppliers bail. How could all this possibly have been avoided? A simple Keyman policy on Joe would have paid the bank their money for his intentions, funded a new CEO instead of Joe's wife, and pay out Joe's family his share of the business. All this for as little as $12 a week.